Welcome to Trading Lounge and the SP 500 for the 28th of January. Well, we've got a top in place now, as you well know, and we're looking at wave 4 pulling back. And with wave 4 pulling back, the normal thing is that it pulls back to either the wave 4 of one lesser degree or the 38.2% retracement levels. So if I take it from this low here, and many other people would take it from either this one or even this one, but I'll just stay where I am for this for the time being. And we're looking here at the 38.2% retracement level at 31.50 odd there. So let's see how that goes. It's just a bit of a guide stick at this stage. But yeah, and also too, if wave 2s are simple, then wave 4s are going to be complex. But, you know, we've been through this here in this particular trend here where wave 4s are being quite simple as well. This was a nice ABC pattern here. So obviously this one here will be, 60% bigger than this one here. Yeah, so you never really know what the wave 4 is going to produce. There's a couple of things that we need to be mindful of, though, is that the first leg down through here, there's 11 or 12 different types of corrections. So the thing that we need to understand is that the first correction, the first leg down, can be in 3 waves. If it's going to be in 3 waves, then we can either have a flat correction, or a flat correction is just another ABC back up here, come back up to the top here, and then 5 waves down through here as such, and just means flat because it's flat. You can get irregular flats or expanded flats as well. The expanded flat just takes the top out here a bit and takes the low out here a little bit. A regular flat, well, this is a regular flat here. The other thing here too is that if we get 3 waves down here, then we could also get a triangle pattern as well within this space. So because triangles are 3, 3, 3, 3 and 3, 5 waves of 3 each, so that's also possible. So there's a variety of things that could occur here. In the first instance, I always just like to look for an A wave, a B wave, and a C wave like this here, a bit like the one that occurred in here. And in that case, we would look for 5 waves in this first leg here. But my point is that what we need to really wait for is to gather evidence and ask ourselves and view that the first leg down through here, will it be 5 waves or will it be 3 waves here? Because that really divides up a lot. If it's 3 waves, then we know that we're going to get, it's going to be much more complicated. Yeah, if it's 5 waves, well then after 5 waves, we know after retracement we're going to get another 5 waves down. So first of all, our target area is between these two guys here, but we'll go for the 38.2% retracement level, which is just sort of halfway between 1 and 2 here, which I really like, which is sort of works with the trading levels a lot. I won't go into that just now, but when we will go into that. So we really need to understand what's going on here with all of this. And one of the first things that we need to understand is that on the cash market, the physical market, we didn't quite get a new high here. We got a new high here very clearly on the Nasdaq, and with the S&P on the platform that I use, which is an IG one, which is a IG Markets, which is a CFD platform. It's just taken the top out here. So, where do we put the top in, either here or over here? So that's one of our first things that we need to look at. This is a 5-minute chart here. We can see here, though, from this top here that we've got 1 and 2 and 3 and 4 and 5 here. And then we've got to move up through here, and then market opens and it's dropped down through to here. This is pulled back 38.2%. So it's possible to count this. If we just forget about this here for a time being, and we look at this as 1 here and 2 here and 3 here, then we can look at this as wave 4 here. But to call this in as wave 4 here, we'll need a breach below this one here. below this low here, and we can also go short from this low here. So we could say 32.40 as resistance is the next short trade down, the next 5 waves down. That would be a safe call in that regard, and we'll have a look at that now. So if I just go to the hourly chart here first, and not to worry too much about the count, but this high here is just a little bit higher than these ones here, and that's how it is on the futures market as well, a CFD futures market as such, so that rings other bells as well. So there's a couple of ways to count this down here already, based on which high we're going to use here. So that's one of the first dilemmas that we've got here. There is another count that that I've got, that even though we just counted it down in 3 waves on the cash market, in terms of 5 waves here, a correction, and then the big empty space here, but it is normally the 3rd wave that gaps, so we need to keep that in mind as well, you know. So as wave 1 here and 2 here, and this would be, well, if we looked at this as 1 here and 2 here, then this would be 1 here and 2 here, and then this would be the 3rd wave here. So this is quite in line with gapping, 3rd wave gap, so of waves 1 and 2 and 1 and 2, the 3rd of the 3rd here. So that kind of fits in quite sort of nicely as that 3rd wave structure here. So as I just mentioned, and we can go and have a look at this in a minute, but it's possible to count 5 waves from here to here, and if that's the case, then we would look for a rally to come back up and cover these gaps here into the 50-60% mark, and then move down from that area there as well. So we need to be a little bit mindful of that. So any move above here would be a trigger to go long at that particular point in time. So we could also just grab this and put this here as well. So this market at the moment is dancing across the midpoint here, the 32.50. The 50 is the midpoint between say 300 here and 200 here. This is the halfway mark here, and it's vibrating across that at the moment. And really, at the end of the day, we just really need to see if that becomes the support or the resistance. But what it does do in the meantime, it gives us this low and this high here. So this high here, if that's breached, we can go long from that point. But probably a little bit risky, but let's go in and have a look at this. Where are we here now? So I'll go to the 15-minute chart where I've got this counted down using this as the top here, counting this down here as 5 waves, and back for 2 here, and then looking at all of this as the 3rd wave in here. We'll have to look at this on the tick chart and show you this. This one here is clearly in 3 waves here, and the thing that I like about labeling it like this here is that from this high here down to this low here, that gives me the 38.2% retracement level at that point here. So as a wave 4, that counts quite nicely in there. So if we look at this on the tick chart here for a moment, just have to get a bit more data in here. So as I mentioned before, do we call that in as a high, or do we call... So we're going to have to revisit this at some stage. It will become clear. I mean, the Nasdaq was much higher, but yeah, I mean, we'll see this in Apple as well, because Apple's pulling back into its, got its 3rd wave high top in play, and we'll have a look at that during the week a bit. So yeah, in this instance here, from here, this is 100 ticks, so we've got 1, 2, 3, 4, 5 here for 1 and 2, and this here can be counted here as wave 1 and 2 here, and 3 here, an A and a B and a C for wave 4 here, and this wave 1 and 2 in here, I'm looking at this as 1 and 2 here, and 3 here, and 4 here, and 5 here. That's how I'm getting that 3rd one. I think it fits okay in that regard, and because either you know or you don't know, and you need to be clear about that as a trader when using Elliott. And I always found, it's very difficult to make money out of Elliott Wave just using Elliott Wave itself. So it's always nice to have something else to help you confirm things a little bit. I mean, I use the trading levels. You can also use volume too if you've got the futures market and a good cash market chart, or indicators. You know, the stochastics works well and so on, but I just like support and resistance and patterns that occur at particular levels, you know. So, but anyway, 1 and 2 and 3 here, that fits quite nicely. ABC for 4, 1 here, A and a B and a C for 2 here, and down for 3, 4 and 5 here to make this wave 3 here. And then the ABC for 4 here, the A, the B and the C here for wave 4 here, pulling back to that 38.2% retracement level. So also when I'm looking at these type of corrections here, they could get bigger in a way. So this is what we just need to be mindful of. So an A wave here, a B wave here, and a C wave over here, pulling back up here further. So that's also possible as well. So I need to eliminate that possibility. And, you know, I could look at this, starting to confirm now, because I could look at this here as up for 1, back for 2, up for 1 and back for 2 into the 61.8% mark here. Or the 61.8% mark is not the end and B end at all. So, but this low here, if I counted from this low up here as 1 and back for 2, but now that's breached that here. So that helps me confirm that we're on the right track here. So what I was going to say here at this 3240, the one I mentioned before, if that becomes the retested resistance, then we know that we're going to be heading lower at that point there. So at the moment here, that's not resistance, is it? It's come through here, it needs to find resistance and then drop through below that. So that's what we need to look at there at that point. But that's the magic number here, the 3240. And I think this is the count here with wave 3 here, wave 4 here, and wave 5 coming down down here further into the 3200 area through here. It will slow down through group 1 here, 1, 2 and 3 here. It will slow down. So if this is 5, let's just look at this a moment. If this is 5 waves down here, like 1 and 2 and 3 and 4 and 5 coming down here, let's just say that it drops into here somewhere, and we can confirm that. So we get that 5 waves. So that would still leave us with, well, it could be wave A at that time and then come back up for wave B, or could even be wave 2 here, but I'll just call it wave A and wave B here for the time being. So we'll have those 5 waves here, but I'm still concerned about the cash market having that extra this high over here. So this could also be 1 and 2 here, and all of this the third wave here. So what I'm saying here is that it's possible to, have this as 1 here and 2 here, and then this A wave here, instead of being there, it will be wave 3 there and wave 4 here. So this wave 4 wouldn't pull all the way back up to a B wave up here, but it'll pull back up as a wave 4 here. So we can expect, in both cases though, we can expect a corrective rally roughly from around this level here, the 3200, okay? Will it be a larger B wave, or will it be, can even be, I won't go into that. It can be blue wave at that stage, a blue wave B at that stage. So that kind of wraps it up a little bit, really. So we're starting to see this confirm here, but we want to see that 3240 as the resistance. Otherwise, we can get a larger correction to the upside there. So the more that you see that, when you look at these guys here, then this is kind of what you want to see here. You want to see a bit more price action in here for that to build on that side of the 40. You've got to kind of look at it and say, is that resistance yet? And it's not, is it? It's not. A lot of price action is not sitting under that level there just yet. And you may get it wrong. It may take you 2 times to get in there and get on the right side of it at the right time, but that's what you need to do to get it there so far. And if you're short from the top, well then that's fantastic, and you just need to stay short, because we still need to, and it takes courage to stay in a trend. So yeah, anyway, that's sort of where we are. Let's see how this plays out here. And if this doesn't find resistance here, then we can expect it to move back up and try and cover that gap here. Okay, alrighty. Thanks for tuning in. Cheers.